In this video, we're going to take a look at two different methods of accounting, the cash method and the accrual method, so you can find out what the differences are between the two methods, what the advantages and disadvantages are of each method, and which one is best for your business. Let's start off by asking the obvious question: why do we even have two different methods of accounting? Well, the answer is that cash accounting is very simple and easy to do, while accrual accounting is more complicated and difficult to do. So what makes cash accounting so simple? Let's take a look. Well, the reason is that you only record revenue transactions in your accounts when you actually receive the money, and you only record expense transactions when you actually pay the money. In other words, you don't record anything in your accounts unless money changes hands. Because it's such a simple accounting method, it's perfect for small business owners who just need to know how much money has come in, how much money has gone out, and how much money is in the bank account right now. So the big advantage of cash accounting is its simplicity. You don't need a degree in accounting to understand this method, and you don't really need sophisticated software to do your bookkeeping. A cash book or a spreadsheet will do just fine. But it does have one big disadvantage, and that is that it doesn't provide the full picture of the financial health of a business. Cash accounting does not take into account things such as upcoming bills you need to pay, any income you've invoiced but haven't received yet, and the balance of your inventory on hand. Those are just 3 examples. In reality, there's a whole bunch of other things that need to be accounted for when looking at the full financial picture of a business. And that's where accrual accounting comes in. With accrual accounting, revenues are recorded in the accounts when they are earned, regardless of whether the cash has been received or not, and expenses are recorded in the accounts when they are incurred, regardless of whether the cash has been paid out or not. As I'm sure you've figured out, doing your accounts this way is more complicated than the cash method, which is one of the biggest disadvantages of the accrual accounting method. Another disadvantage is that you may have to pay tax on your income before you actually receive the cash. This means you need to have enough money in your bank account to cover those tax bills in the meantime. Here's an example of how that works for sales taxes such as GST or VAT. Let's say you invoice a client for $11,000 on the 1st of January and the sales tax on that invoice is $1,000. Under the accrual accounting method, the $11,000 is recorded as revenue in your accounts in January, regardless of whether your client has paid you. Let's then say that your client didn't pay you until May, but because your invoice was counted as revenue in January, you had to pay $1,000 of sales tax to the tax office in that tax period. This means you needed to cover the $1,000 of sales tax for this particular invoice with your own savings, because your client didn't pay you the $11,000 until after your tax bill was due. So as you can see, having to cover tax payments with your savings is one of the biggest disadvantages of the accrual accounting method. But despite this problem, the accrual accounting method does have advantages. The biggest advantage is that it provides a clearer picture of your business's financial position than the cash accounting method. Your income statement or profit and loss report for a particular period will show how much income you've earned rather than how much cash you've received. It will also show you how much in expenses you've incurred rather than how much cash you've actually paid out. This gives a much more accurate picture of your profitability during that period. Also, your balance sheet will show exactly what you own and what you owe at a particular point in time, because it takes into account things like accounts receivable, which is the total of the invoices you've sent out that haven't been paid, and accounts payable, which is the total of the bills you're due to pay. Depending on the type of business you run, your balance sheet will also show a bunch of other things, such as your stock on hand and your owner's equity, which helps to provide a complete picture of your business's overall health. And finally, because of financial regulations, many businesses must use the accrual method of accounting and aren't allowed to use the cash method. So another advantage of using the accrual method is that it complies with financial and accounting regulations. So that's a quick look at the cash and accrual methods of accounting and their advantages and disadvantages. Just remember, if you're a small business, you may be able to use the cash method while you don't need to track your accounts payable and accounts receivable on your balance sheet. But if you're a larger business, you're not only better off using the accrual method, you may also need to in order to comply with finance and accounting regulations.